risk-off tone for European markets this morning, with the UK's FTSE 100 index down around about 38 points at the moment, while the Euro Stoxx 50 index is off around about 28 points. The DAX in Germany is currently down 40 points. US stock futures are trading flat. Core government bonds are seeing a tick higher, and we got the German government bonds contract of around about 28 ticks. And at the same, similar to the UK gilt. At the same time, currencies are pretty subdued. The euro is ticking up against the dollar. It was near enough around that 134 level earlier on, but has moved a little lower since. The yen is stronger against the dollar, so the dollar is the weaker currency ahead of the Federal Reserve press conference and meeting later this evening. Peripheral bond markets are inching a little higher, with Spanish and Italian bond yields not as stable as they were at the start of the week. Good morning, I'm Ishaq, Siddiqi, and welcome to another Daily Market Bite. I'm going to give you a quick idea of what's going on in financial markets today. Of course, it is the big Federal Reserve policy meeting today, which investors have been keeping their focus on for the last few weeks, ever since May 22nd, when markets heard that Federal Reserve Chairman Ben Bernanke signalled that the central bank is looking to unwind quantitative easing, and did suggest in the meeting minutes that it could be sometime within the next few months. However, timeline isn't certain or known yet to the market, so investors have been extremely nervous. Global equities have fallen over around about 5% since then. Emerging markets have fallen over 10%, and market volatility has spiked out of the roof. So, going into the Fed meetings today, which has been the big focus for investors, like I said, for the past few weeks, investors are looking for a more dovish Ben Bernanke, who is likely to downplay some of the overreaction in the market that we've had. It's likely that Ben Bernanke isn't going to taper quantitative easing in the forthcoming months. The reason being is that inflation is at a 53-year low in the US economy, and unemployment still remains quite fragile, with the unemployment rate still around that 7.6% level. So the Fed would like the unemployment rate to edge down to below 7%, somewhere around that 6.6% mark, before they really look at cutting back on quantitative easing. So investors aren't too worried as of yet that the Fed is going to remove quantitative easing imminently. However, markets are fearing that the Fed may signal a forthcoming end, perhaps as early as September or maybe October. It's a bit mixed at the moment. Analysts are expecting that the Fed could possibly unwind in September. However, some believe that the Fed will have to keep buying asset purchases until perhaps as early as 2014. So really what investors are looking forward to today is some clarity on QE, on monetary stimulus in the months ahead. And importantly, investors are also looking for the Fed to remain committed to keeping ultra-low rates for in the foreseeable future, up till at least 2015 and 2016. Now, Asian markets were very nervous ahead of that. The Japanese Nikkei fell on the back of the stronger yen. At the same time, we saw a downtick in the South Korean and Chinese markets. In Europe this morning, it's a similar tone. We are cutting risk exposure ahead of the Fed meeting. And importantly, we don't have much on the economic data plate from the Eurozone. We've got the Bank of England meeting minutes out of the UK, which is expected to come in very much in line with what markets are feeling about the BOE, that we're going to have a split on quantitative easing. These are the last minutes from the Bank of England, as Governor Mervyn King being at the top of the Bank of England. Next month we have Mark Carney coming into the Bank of England, so it'll be interesting to see the mix between now and then. And we also have the UK Chancellor Osborne talking at the Mansion House speech, an annual speech where he's going to shed some light on the privatisation plans for the likes of Lloyds Banking Group and Royal Bank of Scotland. There's not much else to say. It is a very volatile day today, and all eyes are on Ben Bernanke and co. Thanks for watching your Daily Market Bite, and tune in for another one tomorrow, and I'll give you an update on how the market has reacted to the Fed meeting minute, the Fed's press conference and policy meeting. Cheers.